Alrighty, I've been asked to make a video showing how I'm using the LRC, which is the linear regression channel that's anchored. So I am putting this together. Microsoft, I made about a $500 profit today using this setup. So I wanted to kind of go over what I look for. Of course, I put in my major levels. That's the green lines here, and I also have support. Um, I'm sorry, resistance up above 425. So first thing this morning, I have made I have done very well right off the start when I get breakouts. The only downside to doing that is you have to be prepared to just get out quick because you may take that first candle down and you know how things can go right out of the gates. You can have a candle come down and then whoop, all the way back up and just really hurt you. So in this case, I had got into an AMD right out of the gates first thing, and so I missed this. This was a perfect setup for upside. I missed this part. However, sometimes I do not take. I may have thought twice about it, about getting in this, but sometimes I'll look and see where, of course, where the support and resistance zones are. And since this was another resistance at this time, I may not have taken this, but I did take it here. Um, so I got the move through the mean, and I use all three of these the same. They all work perfectly. If you go back and review, look at stocks, look how the mean can be the area where it consolidates and just launches. You can have it come off the bottom and just launch through all of them. It's quite amazing. Has been the most simple trading strategy and profitable trading strategy I have used so far. So basically what I did on this today, I actually got in earlier before the break of this because I think I got in on this close, and I was going to get out if it went back below 421. So once it went up here, came down, and then went back above and closed above my 421 level. I mean, and I know this is a zone, but it went. Not only did it go above the 421 level, it went above the 200, which that and closed above it. That means a lot to me. Some traders may not think about that, but I use the 20, the 200, and this is the 50. And since it had already crossed through the 20 and then went above the 200 at the level, that's usually easy trade for me. So I got in right at this candle crossing above this line. Typical way that I make these trades, or I take the trades, is I wait for a candle to come above the channel line. Like for instance, I'll use this as an example. When this came above, I would have got in right here as soon as this candle crossed. Sometimes you'll get a reversal on it, come back through. You just have to be prepared to get out. Get out if you cross back below or above your channel. Let that be your stop. The best part about this is now you can be aggressive and get out on the cross, or you can be less aggressive, which can also cause you to lose. I trade options, so you can lose a lot more. I wait for closes because just because this came down, or just because this one came down and crossed, it didn't close below. So I play for the close. You could just maybe try some on demands and see what works best for you. But I trade the cross and then a close. So if I were to have taken this, for example, if I got this on the move upward, I would get in right as it crossed over the high of this candle, and I would wait to see if I get a close below this channel. If I did, I get out, take my small loss, and I move on. The great part about this is if your move works, which it works. I don't know what the percentage of is, but it's quite amazing. So, and it has something to do with how I anchored this. It was by accident. I just kept testing all these different odd areas to anchor the linear regression channel, And so I decided to, hey, anchor at 4 a.m. until 9:29. And by doing that, I found that it became a major level. Even I'm getting sidetracked, but even say for instance, like you have your what I'm going to call your support and resistance levels that are usually based off the 1 hour, the 4 hour, sometimes the day. But I usually do the 1 hour and 4 hour. Sometimes I go down to 30 minute, but anyhow, those are just major pivot points: supply, demand, support, and resistance. Even though you have those areas, you will notice that this takes precedence a lot of times. It's really amazing. So, and what I mean by that is, like, say this one flushed through, it would go through the major level and bounce right off of this. Sometimes you'll have a steeper gradient or angle based off of how the pre-market, if it dropped or rose. So say you have a steeper angle, you will notice that it will come down and bounce the angle all the way down. So you kind of can you can trade the channel and the bounces. And if they don't work, just get out right away. That's the key to, just good risk management. So anyhow, on this, back to the trade, I got, I took the trade here right as this crossed. So it was a great entry because as soon as I got in, I was in the money. This candle just launched, and then I stay in. I was, it kind of depends on the amount of profit you're making and what you're looking to do, but I I would get out a lot of times on the 2 minute. I would get out when I just got a second red candle and just take that profit and move on. In this case, I rode it to here, and I think I got out on the third red candle. You can also use the 20. It is a great uh, I guess, resistance as you go. And if you get a close below the 20, that's where you get out. So I would have got out at about the exact same time here if you see that. So I kind of got lucky with that. If I were used the 20, it would have been the same area. So that was the trade I took on Microsoft today. I can't remember how many contracts I bought, but I made like $500. That was my second trade. I made $300 on AMD. Let me see where I took AMD right out of the gates. Again, I've been trying to maybe hold off on that because I have got burned a little bit on AMD, right? Or not just AMD, but any stock right out of the gates because you get that volatility. Market movers or makers or whatever, it goes up, goes down, and then you have to let it settle a little bit. The only downside to settling is this is like a breakout strategy as well as a supply and a support and resistance strategy. It's kind of interesting, but I took this move above this channel. I bought right here, and I bought. I think I bought like six or eight contracts. So it went up, and I got out when it came back down. I think I was like $278 on that one. But to give more, I guess, examples, let's go and look and see anything else. Let's see what maybe Tesla did today. I know I'm getting long-winded on this. Sorry about that, but I wanted to make sure. Okay, perfect example of the levels working. Um, Now I have used another indicator that I think it was Sleepy Z. He helped to create this for me, and he put in a multi-day with extra deviations, and those actually work out quite well. So I'll bring that up in just a second and show it. But you can see, Tesla had its boom out of the gate, which is practically every day if anybody's paying attention. It always shoots straight up, and then you get this nice fade back down. But this was money right here. This was money. I actually took this all the way down. Um, so I forgot I had the Tesla trade here. So I actually did well on the Tesla trade as well. I did too. I actually did better on that. I can't remember what my total was today, like 1,500. But I'm trying to do like 1,000 a day as a minimum. But yeah, good luck with that. So anyhow, you can see how perfect this was. It came down, it closed below it, it bounced up. Take your take this candle as soon as it crosses right here. The only caveat here is taking this trade, you're taking it into the 20 and into the 200. You have to be prepared for this to not work. If you take this, you may just get a rejection, because I have found that using the 20 and the 200 really helps you to get a better move, and you'll see that right here, just because you're above it. But this worked out great. Perfect off this level, went all the way up. Second candle, if you use that, or if you wanted to use this channel as your final stop out, as soon as you went below here, you could get out. Just different. I guess it depends on the way your day is going. Sometimes if you're way up profit, you might want to hold and see if it breaks the 20. And in this case, it didn't. It came back up. Would have been another perfectly good entry right here. Of course, you can take the breakouts, but I found that it's much better or safer to wait for a close and then take above the close. That gives you more confirmation that it's moving upward, instead of it just being a fake move up and then back down. So you could have taken the trade right here. Would have been another beautiful trade right off of this level, and that's it for the day for that. Get out on the second red candle, or you could have rode this all the way up to here, and that would have using the 20. Also, I just downloaded a new volatility. I wanted to show this too. I'm actually going to start using this, just kind of looking at it. This thing was really great for giving me entries and exits. I used it today. I just had it on another chart watching it. As soon as you cross over, you get out. So this one would have actually cost me more by using it. So it's set at I have it set at a 1.5 multiplier, but it does give you a good it's based off of volatility, so it's like a stop loss based off of volatility, and you can adjust it tighter or further away to give you bigger moves. But anyhow, that was a pretty cool little indicator that I found today. Okay, so I think that about wraps it up. If you have any other questions, just feel free to put in let me know in the comments or reply, and then I'll try to answer them, or see if maybe put together a better video if this isn't it doesn't explain it enough.